All right. Well, that's just about set. So, how's it going? It is good to actually talk to you. I know we've had some back and forth in videos and stuff, and like I said,
Sure.
I appreciate that even though we have differing opinions on this, that it's not a situation where we're like shitty to each other. And if I have been in the past, I apologize. I
don't take it that way.
Okay.
I've been doing this for a long time, so I don't take it that way. And I'm pretty cavalier, when at times.
Yeah.
But you have a belief, you tell me that from what I can see and from what I've seen is you're not a believer in GameStop per se.
No.
And that's okay. It's okay. I've been doing my homework on GameStop for a long time. But, I make these videos and sometimes people get the update videos and they don't know the whole story or the origins of where we're coming from. Me personally, like why I follow it and why I trust retail and Ryan Cohen so much. But I'm down to have the conversation with you anytime. It's your show. I'll let you run it.
Okay. So I guess I would just say, I think the fundamental disconnect is that, from what I've seen at least, you primarily focus on the fact that they have, like, no debt, which fair enough. Oh yeah, they have no debt and a ton of cash on hand. Those seem to be your 2 points. And because of that, you assume that the company is going to continue and just grow and grow and grow. And I guess what I don't understand is the how. Like they would potentially,
Sure.
if they acquired something, sure. Or if they pivoted the business like really hard, sure. I'm not saying that they couldn't. They certainly have the cash on hand to do it. I haven't necessarily seen an actual plan other than failed gesturing at Web3 stuff.
Yeah, initially that can be the outlook and or what it looks like. But we'll go back a little bit. Right now, I'm happy that they're not doing anything. I don't want them to do anything. I'm not looking for them to spend any money trying to grow per se. I want them to be really good at what they do, e-commerce and the brick and mortar side. And so if they can generate a profit off of that, now we're at zero. That's how I see it as of right now. But I look at the leadership style of Mark Vadden, how they're mimicking that. And he just happens to be the former CEO of Chewy.com, but he also is the CEO of Zulily and Blue Nile, right? The diamond company. So this is over the last 25 years while Amazon has existed and all these downturns in the economy, he's managed to become a billionaire doing the business that way. You select a couple of key categories, things that Amazon's not great at just yet, and you try to make some profit off of it. So that's where gaming comes into play. Obviously, the pet products worked out and the child and women's apparel worked out in the past. So I think that's what Ryan's trying to do, mimic what Mark Vadden was doing for so long. And he said it. He said it in an interview in 2014 where he said, you don't build during this time frame. Cash burn rates can go out of control. You sit on cash, you wait for the right time, and then you just keep doing what you're doing, and it'll all work out. So that's how I see it. But remember, I invest well beyond 2 to 3 years. I'm not a trader. I'm an investor. So I'm looking at something for 10 to 20. That's where I look at GameStop. So that's what I'm looking at right now.
See, that felt like a lot of gesturing towards the idea of like growth and responsible like use of capital. But like I'm still not hearing like a direct, here's the plan. Like it felt like we're emulating these people who are successful, therefore we will be successful, but without specifics. And also I would argue like if we're comparing to like competing with Amazon with specific categories, something like Chewy wasn't profitable under Ryan Cohen, I don't think. Like it wasn't until later after it was already acquired and purchased and things were like integrated into like the supply chains of the already existing company that stuff started getting profitable. And even then I thought the margins were pretty thin.
So the building blocks are there. You can become profitable tomorrow. Like Hannah, I'm just telling you, in retail period, in business, you can be profitable tomorrow. Just cut everything you want and I can show you a profit. That's not the way it's going to happen. Building the infrastructure and the culture takes time, more than 5 years, more than 7 years. So yes, Chewy is a brand name now. And it's a calling, like people know what it is. You say Chewy, they go, okay, yeah, that's the pet product store.com. The same thing happens for GameStop. GameStop has this recognizable name. The brand is there, but the culture's not there. For the employees themselves, the way they run their company, the way they step over, paper clips and staples to try to make this dollar for dollar. That's why he put out the letter and he said, hey guys, we're going to either need to really make a profit here, cut everything we can and do it right. But that's the structure. That's like the idea that moving forward, it's those incremental increases that'll show the profits. When people want a roadmap and a game plan, you don't tell that. The reason why you don't tell that is because I can't tell Amazon, hey, I struck gold, I struck oil, Web 3.0, this is how we're going to do it, e-commerce and discounts and however we're going to do it on that side. You don't tell anyone your game plan, because then they're going to beat you. And somebody that's bigger than you, they're going to cripple you. That's how I see Amazon winning. But yeah, I would never give him the game plan. And that's why I'm happy he doesn't give out guidance. And I sit here and I tell you, I invest, quote unquote, blindly, as people are like, try to stop me from doing it. And I'm just telling you guys, I see it bigger than that. I see the culture. You know, when they say no one's talking at GameStop, Ryan doesn't talk. You know who does talk? Larry Chang. Larry Chang talks more than any executive I've ever seen in my life, but he's doing it through educational tweets. So anyone who's a GameStop investor that's not following Larry Chang, they should. He's on the board of directors. He's also the chief investment officer for Evolution Capital. He's the individual that I would tell you that's giving out the game plan and the map for GameStop. If you read his tweets, they're phenomenal. So it taught me a lot in business.
Okay, so I think you and I have something in common, and that is that we can both talk. We could just both talk for a really long time. But I think the problem is when you actually break down what you just said, it was effectively, we need to cut and cut and cut. And then you talked about developing a company culture, but so far the recent thing Ryan Cohen has done is basically blame his employees and act like they're the problem and then cut their benefits and hours. Sure. Like, is that what you consider developing a positive company culture where employees have good morale and want the company to succeed and do well outside of the practical, they just need a job?
So in the world of private equity, right, and I totally agree with what you're saying, to the point to shed light on it, you have to have a washout. You have to have this cleanse of the old guard. So to wipe out everything that they did or they were inflated, I've touched on this with so many different videos. You know, the percentage that they're paying principal, they're called principal financial, the individuals that were in charge of their benefits program and their 401ks, we don't know what the percentage was, but I can tell you that private equity on the backside is in charge of that fund. So he can renegotiate everything he has to do. He can clean it all out. But these are entry-level positions that we're up for on the chopping block. These are guys that we're going to hire straight out of high school or kids. These are not working-class adults at the executive level. This is not the corporate level employee. This is what they call an exempt employee, right? Or a non-exempt employees weren't affected. So, or the vice versa. I'm so sorry. Exempt employees were affected. So when you look at it, it's not just the overall culture of the business. It's just letting you know that the fundamental people that are coming in, hey, this is the new standard. This is where we're at. And yeah, I might be asking more of you for less, but that's in every form of business. Everyone's having to do more for less. This is not just sitting back and going, you know, we've always gotten a raise every year. Well, now it's incentivized as in case, you know, your share price is going to dictate what your bonus is because you're getting paid in RSUs. Therefore, you need to produce. Therefore, you need to cut those costs. Go ahead.
It stuck out to me, and there's a decent bit to go through there, but it stuck out to me that you were mentioning the lower level employees as if like, fuck them, who cares? Like, it felt a little bit like you were like, well, these are just people out of high school, or these are just low level, whatever. Like, people require benefits regardless of their age. Like, that's...
Oh, you're absolutely correct. But I'm telling you is this, if you're going to your employer and they tell you the first day in, here's what it is, be thankful for what you have at that point. If not, find a new employer.
Right, you know, and many have, which is why we've seen posts of people walking out of GameStops and being like, fuck this place. And we've seen on the employee subreddits, the employees have nothing but terrible things to say about this. They mock Ryan Cohen, rightfully so, I think, for his ridiculous condescending email about, all right, we need to tighten our belts. Like, is he the dad from Troll 2? What are we doing?
No. Well, let me ask you something, and I don't mean to get personal, but have you working a W-2 job, okay, which I currently do right now?
I know you do.
I'm just asking, how many of these individuals have gone through financial turmoil that needed a job? It's slim to none almost because it's generational. So the individuals like myself that look at kids and say, you're pissed off that they're not going to pay you X, Y, and Z, you're 25, go find a different job then. I'm telling you right now,
maybe you should demand more from your employers. Have you considered that? You should ask more of them, and if they're not willing to do so, then yeah, that's the market. You leave if you can, but if you can't, then it's a hostage situation, basically, that you're condoning as a business practice.
It's not that's ridiculous. Everyone gets paid a paycheck, right? So, like, the idea, and this is like where fundamentally we're going to not agree, because the idea that you should be able to walk in and demand things is crazy. You should be so thankful that you get a job.
That's the market. You're selling labor.
These are first world problems, not third world problems.
What the fuck does that mean regarding this? People in the United States don't deserve to have health care and food on the table because they work for the company that you like?
They still have health care. It's the level of health care, the level of benefits that you're asking for. Not every corporation can provide that. You trivialize it, but I'm telling you, I've lived in
your business model can't afford to take care of your employees. Your business model sucks, and you don't deserve to be a company.
That's not it. It's at what level do you get where you actually garner that pay and or that benefit? It's not for everyone. Not everyone's a Costco. Not everyone's an Apple. Not everyone's Google. So right now,
when you work for a fintech company, welcome to America, where if you work for the right company, it's okay if you get cancer, but if you don't, you fucking die.
You work for a retail entry-level company. I mean, I don't know what you want.
I would like employees to be treated fairly. Why is this not a problem other places in the world where it's not even like an employer thing?
Why is it that when private equity runs healthcare situation, any healthcare, I'm talking about old folks home, I don't care what it is, the mortality rate increases 10% because they cut out so many things. It's okay to cut out corners everywhere else in this world, but if GameStop cuts out one fraction of benefits to employees, it's up and all. They're terrible and they're poor business to work for. That's ridiculous. They are.
I also don't think it's. I don't like private equity and healthcare in general. That's what I'm saying. Like this is part of a larger issue. There would be no doctors. There would be no lawyers. There would be no nurses. In countries where there's universal healthcare, there's no lawyers and doctors. In the United States, you have a right to a lawyer. Here. We still have criminal lawyers. Other
but we're talking about here in America, where they cut out all benefits for grocery store workers, they cut out all benefits for healthcare. They've been cutting benefits across the board. That's the first thing you cut out.
And that's a problem. When you think about that's a problem.
It is a problem, but it's as in to say that it's GameStop is the problem. GameStop is the vulture here. That's not it.
Part of it? If a bunch of vultures are picking at a corpse, are they not all partially responsible for the condition?
What did they cut out for the entry-level employee?
I would imagine a decent amount of their healthcare benefits. They have less availability of doctors to go see and treatments. That's what happens when they cut your benefits, is there's less options.
Go read it again. Go read it again. They didn't cut it out. They
lowered the tier, thus cutting out.
Go read it again. That's all I'm asking. Okay? Because I'm telling you, there's still benefits there for the employees. The 401k portion, the match that they took away, that's financial. That's different. You're in a state right now for the employer itself of survival because private equities attacked them over the last 3 years. No, they were extremely profitable.
This comes down to the fact that you think it's like. To be clear, is it just short sellers, or are you big into the whole naked short sellers conspiracy?
I have nothing to do with that. Okay. I don't give a damn.
Okay. But you just said private equity has been attacking them. In that case, I kind of assumed you meant short selling, right? So short selling?
Absolutely not. No. See.
So how is private equity attacking them if not through short selling? Okay. Like, what do you mean? What's your thesis here? I'll shut the fuck up. I know I'm interrupting.
I'm with you, Hannah. I just want you to. There's a different story here. I have a whole series called Connect the Dots. There's 49 parts. I'm working on part 50 right now. And it's about the dots that our private equity since the 1960s have been destroying America from within, i.e. planting executives on the board of directors for all companies. And I've shown the web and how they destroy them from within just for fees, just for the 2 and 20. And if you don't know what 2 and 20 is, they get back 2% of the initial investment and 20% of all profits. But they do that based off of what? They're passing around these companies to each other. And I've explained it in detail. Connect the Dots, brand. That's why I was able to call Bed Bath & Beyond's bankruptcy in detail and how it's systematically getting torn apart and whom were the individuals that were doing it. And I've shown it. So when you look at GameStop and they don't have private equity in there, they pushed them out. They pushed out KKR. And when they did this, I said, oh, goodness. He went in there. He did the takeover himself. He put his own money up. Now they're attacking him on freight. They're attacking him on supply chain and every other aspect of the business. This is why GameStop's the juggernaut, because they all bet on it. They do a thing called jumping, and that's quote unquote jumping. It's been in a lawsuit for the Caesar's Palace coup. That's a book that you can read as well. But 9 private equity firms jumped in and tore that apart. They cut it up. They do vulture capitalism. But when you saw them jump on GameStop, everyone went and shorted the stock, yes, but they were jumping on it because they had the green light from KKR, from Apollo, from Ares, from Bain and Company. They're all out there. I've talked to Carlyle Group. So many private equity firms that destroy companies from within by putting their executives on the board of directors. They've been doing this since Drexel Burnham Lambert, the only hedge fund to ever get shut down by the government for doing this. And Mike Milken and the Milken Institute, I have connected dots. That's what I talk about. That's why when you look at it and you're naming a company and you want to attack them, you don't know who's on the other side of it. Private equity owns the 401k deal for GameStop that they just bought into when private equity took over there. They destroyed this company for the last 14 years. And now they're repairing themselves. AMC's been destroyed for 23 years. And that's because private equity bought them out in 2001. Adam Aaron worked for Apollo directly for the last 25 years. It's a private equity's wet dream. That's just what it is. And for the lack of a better term, I apologize. I don't want to offend anyone. But if you know my angle, it's private equity. It's how it's ruining America and all the companies within it. Carvana, Bed Bath & Beyond, Mullen Automotive, AMC, and of course GameStop. But GameStop's the only company that pushed them out right now that we're speaking. You want to talk about controls, you want to talk about how companies run, that's Target, that's Kohl's, and that's not GameStop. But they're run wrong. GameStop's not. They're doing it the right way.
Okay, so what I'm gathering from this is basically you're looking at situations of vulture capitalism where, like, companies will go in and do, like, leveraged buyouts or buyouts of things like Toys R Us. When that happened, go in, tear the thing apart, understand, basically sort of a managed decline is what you're trying to describe. Is a managed decline where they can then part it out for profit is what you're describing.
It's been noted that they do it on purpose. They make bad decisions on purpose. Like they over leverage themselves, or they do share buybacks. Like when they don't have the cash to do it, they'll even sell their assets and lease them back with the leasing company, be private equity. And they always get the direction from some type of leverage buyout firm. It would be like Macellum, Ancor, and Legion and Partners. 3 hedge funds go in and they jump on one company. Okay. And they did that with Bed Bath & Beyond. They do that with Kohl's right now. They've done it plenty of times. Some people fight them, some don't.
But currently, as you've stated, and I understand you're saying that now they're clear and they're going to build themselves. You're saying that because they're clear of private equity interest, you believe that they are now a successful company. I think the problem here is that you assume that if you are, let's say, an entity that wants to ingratiate yourself into a business, into a managed decline where you can then part it out and make money, it wouldn't make sense to do that to a company that's doing really, really well. What you would do is go, what businesses are already in decline that we can then take control of and make money off of? You don't manufacture, the entire decline, you manage it. You manage the decline, you don't manufacture it. And that's the difference. GameStop's price didn't go down and wasn't failing just because of private equity interest. It's because it's a bad business model.
Not at all. The balance sheet doesn't support what you're saying.
When's the last profitable year they've had? I think it was 7 years ago was the last profitable whole year.
It could have been 2018. I'm not familiar right now while I'm sitting here in front of you. 2016, 2018.
7 to 8 years ago. Better, almost a decade, we're talking, since they have made a profit.
Yep. And we're on the right side of
history. That's a solid business model. That is a solid business model, 8 years without a profit.
Yeah, you have to know what happened. They actually... they destroyed the company from within, and by doing so, they lowered the market price, the market cap all the way down, and burned off all of their goodwill on their assets. Therefore, they took an impairment charge, a loss of over $1 billion. And that hits the actual balance sheet. So it makes it look like they're not making money. But in reality, they still are making money. That's why they were able to pay out a dividend. And you say, why the hell would they pay out a dividend? They have no cash and they just lost $1 billion. Because they wanted to deplete all the coffers. That's the complete opposite of what they're doing right now. But when people learn how GameStop's operating with zero goodwill and still have $1.2 billion worth of equity with only a $30 million cash burn for the year, annual cash burn, you're looking at around 10 years, 30 years worth of business just based off the current cash rate. So there's no way anyone that tells you they're going bankrupt or the business model doesn't work doesn't understand the industry. If you
literally just said they're burning cash. They're burning cash and they
$30 million? Anna.
Okay, but why are you assuming that is static and that the losses aren't going to increase over time? You're acting as though there's nowhere to go but up. Meanwhile, the market of video games is going away from physical, which we've talked about.
Okay. Well, you can stop that narrative for a second. Let's just talk about this for what we're talking about today, not where they will be. I'm talking about today. They are profitable today. They showed a $2 million loss for the quarter, but they had marketable securities purchased $50 million and inventory increase of almost $90 million. You're talking about $130 million they didn't have to spend, and they did it anyway. They're hiding their profits. I've been saying this for 2 years. They're profitable today. You guys just all
Having
looking at the wrong.
expenditures isn't hiding profits. Using money now to potentially make money later is a cost of doing business. That doesn't inherently mean they're going to make a profit on those investments later.
I'm making the bet that they're going to be profitable over the next 10 years, and you're making the bet saying no. Is that correct?
Profitable year over year? Like, can you give me an exact? Let's be more specific.
Trailing 12 right now. Trailing 12. They're going to be positive.
I don't even think that's unreasonable. So no, I wouldn't make that bet. They might be profitable,
okay, so but
I don't think it justifies the price that they're at, and I don't think that means that the business is going to be existent necessarily.
So what do you think? I mean, what do you think retail trades at? I'm just curious because you seem somewhat intelligent about the trading and what it's actually worth. I'm saying GameStop's trailing 12 is positive in a retail sector that's in a decline for everyone, not just GameStop.
Yeah, and then when for GameStop too, though, like that, there's still retail. Just because they're in a sinking boat with other people doesn't mean they're not in the boat. Sure,
but their shareholder equity is in the positive $1.2 billion.
Okay, what are they going to do with it?
Oh, watch this. They don't have to do anything. You're saying value. You said you don't think that the stock price equates value. And if we go with the current stock price right now, they're trading at around 26% equity per share. There's not a single company in retail, not a single one, and I've checked them all, that trades at a better book value than GameStop with zero goodwill. They're not propped up on assets. They're propped up on what they're actually worth. So
they're not what they're actually worth, though. They're propped up on like people who are really, really interested in them for meme stock reasons. And I know you hate that word. I know you hate that word when applied to GME. I get it.
They're a blue chip company. They're a blue chip company.
They're a blue chip company.
Absolutely.
Can you justify that statement and don't go on like a 5-minute diatribe? Give me a sound bite. Justify that statement in a way that isn't a buzzword.
Yeah, they were in the S&P 500 before. They're going and they will be again.
Past tense.
Yeah. Private equity pushed them out. I mean, I could say it 3 times like you, but that's not going to put any more emphasis on it. I'm letting you know that value, dollar for dollar, it's the best buy you can do right now.
Okay, again, you're just vibing. You're not saying statements other than just buzzwords. This is amazing.
They're profitable. The trailing 12 is profitable. There's one thing that's going to happen right now, and you're going to find that out in the next, 120 hours. Second, they are a profitable company. Period. So where do you find value in the next anything? And we haven't even talked about player. I stay out of it. I don't even go into the idea of the things they are doing, but to know that they have so many things I call it the hidden figures. If you haven't seen that video, it's called Hidden Figures. They have so many things hidden within their actual 10K and 10Q. They're profitable by about, I'd say, $300 million a year. I'm ballparking the number, and that's an easy number. So after 5 years, put them another $1.5 billion in the bank. What exactly do you think they don't have? Like, they're that. And then when that business model...
They have a business model that's going to be profitable long-term at the footprint they are at. Even if they are, again, maybe they'll shamble along. Maybe they'll shift a bit. But right now, if GameStop has it currently exists...
The demise is coming. No, you didn't say they're gonna shift and they're gonna be okay. No, you said they're done. I've seen every video you put out.
I think that they'll probably go away. They have a lot of cash to burn, but unless they do anything, if they stay in the state they are in right now, yeah, I would think in 10 years they'll be out of business or so small and regional that no one even knows they exist, except for people who have them in their town.
Well, guess what? We have plenty of time to watch it play out. I really appreciate you, young lady. I will say this respectfully, Hannah. I've heard your every point you've ever made. I went and told myself, and I had to counter it in my own sense because I watch your videos offline. I don't watch them like when they're live and stuff. Yeah. And I say, okay, she's wrong there. She's wrong there. I understand why she thinks that way. She's wrong. She's wrong. There's stuff that you don't know yet, like the private equity angle.
No, I understand the concept of that. Like I used to work at Toys R Us in like college. I worked in Toys R Us for a little bit when that was all happening. I know about it. I just think that you're fundamentally assuming that only one thing can be the cause of an issue, and GameStop can be a victim of a general economic culture of that sort of vulture behavior, and also be a bad business that doesn't have a future because of shifting landscapes in retail and gaming. Like, I gotta ask, what game do you play? Like, I genuinely, this is not a gotcha. I really don't know. Do you play video games?
More than a little. I'm one
Awesome.
of the top
Great.
players in the world at TFT. I own 3 PlayStation 4s, a PS5. Been gaming my whole life.
Rad.
I'm an avid WoW player. I do RPGs. I've played everything in the world. So
good.
I love video games. I love GameStop.
Me
That's
too.
just it.
We both like games, and we hate PP. So we have more in common than we do differences.
The word hate is strong. Okay, I don't necessarily hate someone. I dislike the fact that they went after my family, my kids, and all that nonsense. But I really don't care. I don't elaborate on that. I want to talk fundamentals. One last part to you, just in passing. When we are correct, the guys who actually believe in GameStop, because we know what gaming is, and we know it's this compound growth. The average e-commerce shopper shops more and more each year. It's layered growth. They don't go away. You're going to find out this snowball that's been rolling downhill is bigger than you could ever imagine. I'm telling you, they're hiding the profits. People just don't understand it until they see it. Now, the people who watch the channel, watch the balance sheet, they see it. Again,
hiding, saying that they could theoretically have fewer expenditures and be profitable is a
no. I'm telling you, $100 million swings every quarter for the next 4 equates to $500 million of profit, and it's been happening. They did I believe it was $115 million, $113 million swing last quarter. This one's going to be $100 million. The next one's going to be $100 million. The next one's going to be $100 million.
Why are you assuming that it's increasing? Why are you assuming that it is a steady growth rate of $100 million per quarter? You're saying things that sound nice. I'm sure if you're invested in the stock, but you've not justified a single one of them.
Balance sheet. I study margins.
Balance sheet. Buzzword.
Yeah.
You can't just say it. You gotta explain what's in the balance sheet that you're saying is doing this.
You can be an alien and you'll still know the math, and it's absolutely correct.
What's the math?
Have the margins. The margins of, did you see the profit margin last year? It was 21%. Gross profit
that's
margin.
impressive that they still didn't make a profit all that year then.
No, the gross profit. This is not net. Gross was 21%.
Net's what matters. Net's.
No, it's the low. But my point is, it's the lowest it's ever been in the history of their company. They just went up to 27% the last 2 quarters. They're going to be up at 27, 29%. You annualize on an inflationary number. The supply chain issues, everything they had going against them in 2022, the SG&A that was just blown out of the roof, were all just hidden expenses.
What about the problem of their most historically profitable sector, used gaming, continuing to shrink as digital markets continue to grow?
That's the margin of profit. It's not the actual.
Historically, in their most profitable years, that was the sector that made them the most money.
The sector that makes them the most money is accessories right now. Accessories and hardware.
When they are not profitable year over year. Previously, in the past, when they were profitable, the thing that made them money and made their business model successful was
conversation.
I know. I feel like I'm taking crazy pills.
They are profitable right now.
Not
That's why I just
on paper. They're really not.
$2 million,
not year over year.
They missed it by $2 million last quarter.
Oh boy, they only were down $2 million. Correct. Last quarter. How about the whole year? This is what I'm saying. Yeah. Anyone can point at quarters and go, look at, we made a profit that quarter.
Hey, you want to meet up next week? I'll be here. Trailing 12. They're going to be positive.
Of course.
So your whole narrative is out the door.
Especially this quarter with Ryan Cohen. And I talked about this. Ryan Cohen's the CEO. And he is going to pull out all the stops and make sure that this report shows he cut where he's cutting where
it's already going to happen. This is why I know you don't watch the show every day, but that's okay. They were already profitable last quarter.
Yes.
We already knew that.
But they haven't year over year.
They were already profitable. Did you know that when they showed a $51 million or $48 million loss, no, $51 million loss, quarter one, the $51 million is actually hidden on the SG&A as an expense towards the commitments that they already had from the previous 2 years. They're paying off things even now. This is why the SEC filed the letter to them and they asked them to be more direct on this one, on quarter three, SG&A byline. They actually have to tell you what makes up it because they're not telling anybody. I'm telling you what they're hiding. And the letter's there, and I already talked about it, and I touched on that. They're literally hiding their expenses because they have been paying things off that they're getting ahead of it. They're so far ahead.
Didn't you say they already have no debt? What are they paying off? They had no debt.
Okay, there's a difference between no debt. There's corporate debt and operational debt. Okay. So if you don't know the two, no,
I understand what you're saying. I understand what you're saying.
There's long-term liabilities and short-term liabilities, and there are no long-term liabilities for them per se. They are running a great business, and I'm not gonna let people just shit on them for it. I'm telling you, they're doing great.
I'm not shitting on anyone. I just don't think that the value is currently justified, and it's clearly still on the momentum of 2021.
I mean, what is this justified? Wedbush put them at $6 when they're at $4 cash. You can't buy this company for $2. You can't buy it for $2. That means it's only worth $600 million. They sell $6 billion in sales. There's just
again,
the
revenue versus profit. PP does this shit too. Yes, you can have high. If you get your company big enough, you can have really high revenues and still not make a profit. I can have high revenue selling $1 for 50 cents if I really want. It's just not reasonable.
I'll do it to a different way so that you'll understand it this way. The current ratio, assets to liabilities. I have no notes in front of me, Hannah. I'm just talking to you.
I'm very impressed.
The current ratio is 2.2, 2.18, whatever it may be. They're over 2x on assets to liabilities. This is the perfectly run company that no one wants to talk about. Everyone wants to look at top line, bottom line nonsense. Listen, they're running.
All these people want to look at the profits of the company. What's their KD ratio? That's what I want to know. I will invest in a company with a good kill-death ratio.
I know you do. But chances are you're a camper. You're in a corner and you're waiting for the game to end. I got it. Thank you so much for everything, Hannah. I really appreciate the time and the respect between each other. I don't mind going heads up. Appreciate you. I'll let everyone know that this clip's out there. I might clip it later. I got to get to work. I got to do my thing. But thank you so much. Hey, keep doubting GameStop. It keeps me going, and I'll wake up tomorrow.
See you later. Have a good one.
Yes, ma'am.